was kind of more of an Ethereum maxi, I couldn't really continue to hold that point of view.
Dial-up is Bitcoin, broadband is Ethereum, and fiber is Solana.
During bull markets, marketing drives majority of the conversation. Bear markets goes back to core fundamentals.
The point of a bust is to clear out all of the nonsense that accumulates during a boom.
People that buy crypto are not necessarily the same people that use crypto.
Less than 1% of people who are in crypto actually have a Web3 wallet. What's up, everyone? We're back again for the Next Billion podcast, where we talk to the builders, the awesome people in the Solana ecosystem, but also other Web3 ecosystems that are really onboarding the next billion people. And today I have with me a friend who actually we've only really spoken not too long ago, Logan Jastremski, or I can call you Logan J or something like that. There's a lot of syllables in that name, man.
There are. The Polish last names, they're difficult.
Absolutely. But we'll talk a little bit about what you do as well, Logan, but maybe just as an intro to people out there, how did you get into crypto? What is it that you do? And we can talk a little bit about funds as well. I know you run Frictionless with a partner, so we can get into that and what you guys are seeing in the space. But let's start at step one, and we'll get to like step a million by the end of it. So
perfect. Thank you so much for having me on. Typically, I'm the one that's doing the podcast and the interviewing, so excited to be on the other side.
By the way, everyone should check out the podcast that we did. I was on Logan's podcast not too long ago. I think we can link it down below or something like that. So yeah, check it out.
Yeah, so first question, how did I get started in crypto? So I originally kind of fell down the rabbit hole in 2017 in that bull market. My younger brother at the time got into Ethereum really at the beginning of kind of the ICO bubble. And towards the end, in like the November timeframe, I was studying computer science at the time and informatics at Indiana University. And I was like, all right, this thing just keeps going up. Like, I have no idea what's going on.
Ooh, like, famous last words.
Exactly.
Keeps going up.
Exactly. And so I was like, it has to be a Ponzi, like what is going on? And so I really took like a week or so where I just like did nothing else but like try to understand like the blockchain ecosystem. Unfortunately, being so new in the space and kind of catching the tail end of the ICO boom at that point in time did not really know as much as I thought I did. But what happened was I kept with it throughout the bear market and really just tried to learn as much as I could. I kind of went the traditional Silicon Valley route afterwards, ended up working in San Francisco, and then ultimately that led me to joining Tesla. At Tesla, I was leading the supercharging team on the software side. It was amazing. It was really fun, but I ultimately got pulled back into crypto and Web3 once DeFi summer started happening. And my main thing at that point was really trying to figure out how these blockchains work and scale from like a first principles standpoint. And so spent a year just kind of doing independent research and trying to really break the blockchains down to their core primitives and do like a more apples to apples comparison. I would say at the beginning of my journey, I was kind of more of an Ethereum maxi, but by the end, I learned so much that I couldn't really continue to hold that point of view. So
I think, by the way, I think that's how we all kind of started in DeFi summer 2020. It's like, that was just the only game in town. And it was just, everyone was using their MetaMask, everyone was on Ethereum, and there's all of these, food coins happening every day. And that was just the way of life. There wasn't anything else.
Yeah, it was definitely super interesting. I mean, the thing that like ultimately really encouraged me to look into other ecosystems was once gas fees just started getting super high, I was fortunate enough to kind of be able to pay those, but I was really thinking about how do you actually get more users into the ecosystem? Doing kind of product at Tesla, I was super excited just to look at all the metrics and see what was really behind the hoods, going and watching things that were happening on Etherscan. But when I was able to peel that back, I found that like not very many people were actually using blockchains. There were high TVLs and lots of volumes, but not that many people actually doing things. And so from that, I really wanted to see like hundreds of millions and billions of people using blockchains, because I really do think it's kind of the coolest thing that's going on in the tech industry today. And so ultimately kind of led me down the rabbit hole of starting a fund and kind of kicking that off.
Very cool, very cool. So I guess you made the comment there, like it's the most exciting thing in tech. And yet having previously worked at Tesla, that's also pretty exciting, right? So what is it about blockchains or crypto in general that is either important or exciting or, I don't know, something that people care about? Because I also have this point of view and I'm like, why would you be working on anything else or in any other area? But yeah, I don't know. How do we get that message across? What is it that is important about crypto and blockchains, I guess?
Coming from Tesla, I mean, they're definitely working on some cool things with the self-driving cars, pushing just electric cars forward in general. But to me, like the biggest thing that really caught my eye was the fact that the barrier to entry was so small, in the sense that, I mean, to start going back and using Tesla as an example, to ultimately create like a self-driving car, and the amount of compute that you need to kind of train those machine learning models is extremely expensive. It's not something that a person or someone that just got into the industry could do unless they raised a large amount of funding. So what really got me excited, going back to like the early days of the internet, was that with blockchain, I mean, if you have an internet connection, you can contribute and add to the ecosystem with really no money. As long as you have a computer and internet access, anyone can participate. And so that really got me excited. And then also the fact that watching kind of DeFi summer and composability happening, really the rate of innovation. When you build a product and that product can leverage another product, what happens and kind of the compounding effects from that is really astounding. And so, I mean, Tesla is famous for working very long and hard hours, but that cannot even compete when you have the innovation of composability and the kind of compounding effects from applications being able to leverage each other. Both of those got me very excited. I mean, and then combined with like the normal stuff of like incentives and kind of be able to effectively coordinate humans better.
Yeah, I tend to agree. I think the big innovation to come out of maybe the last 5 years in crypto is a login button that you can log into any website with your wallet and it just works. And it's like a really nice experience. You literally just click the button and then you're in. It's no usernames and passwords. There's no this and that. And I hope that they don't steal my information. It's, well, no, like you own your keys. I think that was one innovation. And then, yeah, I think the composability was another one, right? Where you could stack different strategies on top of each other. Do you think we have hit a barrier in those sort of things in the last, say, 6-12 months? Like, I don't see the same level of, oh, gee, wow, this is totally brand new. I'm going to spend the next 10 hours today. Because I remember that's what it was like, it was hard to keep up. There was always something to read about or something to do. It seems like we've all kind of been there, done that now. Or is that maybe just a natural sort of part of the market now? We're maybe seeing some more maturity. Like, it would be hard to say, like, all of the things back then still exist. They don't. Many of them disappeared. So maybe we're in a better part of the market. What's your take, like, in terms of the innovation sort of side of things? Are we still getting there?
I mean, in large part, we're still very early. I think during bull markets, things get much more chaotic. There's a lot of noise. Kind of marketing drives majority of the conversation.
True.
And so it's easy to get very distracted by the shiny new thing in the bull markets. In the bear markets, more holistically, I think, just because there's less noise, less kind of chaos, it goes back to kind of the core fundamentals, and we really kind of have to ask ourselves, like, what are we doing and what are we building? And I think that's kind of the exciting part, because I mean, just from my time hanging around in 2018, 2019, and then kind of seeing all the things that started happening during DeFi summer in 2020, the people that stuck around at that point in time were really the people that were rewarded the most heavily for this past bull market. So I would say, like, to the people that are coming in today, and if you continue to stick around to add value, those are going to be the people that are going to be setting the example during the next bull market. But I wouldn't say innovation has stopped. If anything, I would still say that we're like just early in the sense that there aren't very many users. When you look at OpenSea and Uniswap, I think each of them respectively have had less than 5 million active accounts that have ever interacted with those contracts. And when you compare that to like Web2 companies like Snapchat or Facebook, even Twitter, the amount of monthly active users is in the hundreds of millions. And the lifetime users are definitely in the billions. So we're very early in that sense. So I would say there's still a long road ahead.
That's true. I think maybe we compare it to where we've come, because I often go, wow, some wallet has got like millions of users that have signed up and used it. Isn't that amazing? And it is, like, taking nothing away. Like, it is absolutely an amazing feat that Web3 in a couple of years has these wallets that are doing millions of users, because before that, there wasn't really that much of an uptake, right? But I think to put it into perspective, there's still a long way to go until we get to parity, as well as even just the crypto market in general. Like, how many people are using Web3 wallets versus signing up to an exchange? Last I heard, I saw a stat maybe like a year ago, it was like less than 1% of people who are in crypto actually have a Web3 wallet. Maybe that's changing with the NFT world, but it still seems that there is, something important there for people to crack. Like, is there a missing product, or I don't know. What would you like to see? Where do you think things are going? Like, we saw DeFi as a thing, then we saw NFT land as a thing. It still kind of is like the main driving force, I think, for a lot of stuff. But is the unique app for bringing in 1 billion people buying JPEGs, or is it something else?
That's a good question. I mean, one of the things that you mentioned earlier was that people that buy crypto are not necessarily the same people that use crypto. And I think that's an important distinction. I think Coinbase published that there's maybe a couple 100 million people that actually hold crypto. But I think the end goal will actually be like users and people interacting. And that number, as you mentioned today, is in the low millions. It's not a lot of people that are actually doing things on chain day to day. And so when you think about the onboarding process into crypto, I still think there's a lot of friction around that. The main thing today is you sign up to an exchange, and then outside of the exchange, what is the highest touch point and will continue to be the highest touch point, in our opinion, is just the wallet and that wallet infrastructure. And so today, our first company that we invested on the fund was xNFT and Backpack. We're really excited about their team, what they're doing on the wallet space, really trying to make kind of an operating system for Web3. And so just because that is such a high touch point, I mean, even with private keys, trying to understand what private keys are, that private key management is very hard for kind of the normal individual. And so if you can abstract some of those complexities from that, and really just allow the end user to gain the benefits of the blockchain ecosystem, I think that will be powerful. In some sense, we are still very early and just like people don't know what a private key is, and maybe they shouldn't have to long term. And so today, that's still like a core bottleneck. And then DeFi NFTs have been super large. I think NFTs more holistically caught me off guard with just how mainstream they actually got. But it was cool. They really kind of set like the precedent and the culture for Web3 and brought it into kind of like the Hollywood area. I think with Electric Capital's recent report, it was highlighting that 80% of new wallets created, first interaction was through an NFT. So I definitely think they're here to stay. But I think what we saw during that period was really a failure of kind of like the previous legacy infrastructure and like the layer ones, with Ethereum just not really being able to support that load. With gas fees being extremely high, people kind of being priced out of the Ethereum ecosystem, kind of moving to BSC and others really trying to partake but not pay those ridiculous gas fees. And so what we're excited about is really these next generation blockchains, Solana included in that will enable very high transaction throughput and very low fees. And we think both of those are important from the user aspect and also the developer aspect. Developers being able to make more interesting applications, kind of like the analogy from going from dial-up to broadband to fiber optics. Each time you had one of those jumps, engineers were just able to create more interesting applications that they couldn't in the past. And then on the user side, everything's just more seamless. It's cheaper, it's faster, it has lower latency, all the things that they're accustomed to in the Web 2 world. And so when you combine those two things, I think that is going to be kind of the driving force for the developers that know how to kind of harness that application or harness the underlying infrastructure to build something novel that was not necessarily possible before. But yeah.
Absolutely. I like that dial-up, broadband, and then fiber. I would say dial-up is Bitcoin, broadband is Ethereum, and fiber is Solana. I did a Bitcoin transaction maybe like 3 months ago. I forgot how painful that thing was. Like, it's
10-minute block times.
Yeah, sometimes it could just be 2 hours. It's like, oh yeah, we didn't find a block on the average time scales. So yeah, it's going to be 2 hours just randomly. It's like, oh, okay, I just have to randomly wait for some time period of which I don't know. Yeah. Anyway, but I think good points sort of mentioning there the fund and the thesis that you guys have. Maybe we can talk a bit about that. So you have a fund called Frictionless Capital, correct? And correct. What is your thesis for looking at investments? Because I think 2017 ICO boom, I remember seeing some stats somewhere that said like 200 funds started, and then I think most of them disappeared. And then all of a sudden, I think we had 10x that number, and then obviously now in a bear market, maybe we're seeing a lot of those funds sort of close, or at least they're less prominent. But what's it like running a fund in 2023 in a bear market? Like, people say this is the time to research and build, but are the types of deals that you guys are seeing different to what maybe was going around a year ago? Because I reckon a year ago it was, or actually, let's say 2 years ago, it was people doing DeFi projects, yield farms, vault things that, it was all about getting some sort of coin that had a yield. And there was just like a lot of that going around, right? And there was a lot of that kind of thing. So yeah, what kind of deals are you seeing now with the fund, and what sort of interesting stuff? I guess xNFT Backpack is a good example there.
Yeah, maybe I can start kind of like why we set up the fund, maybe talk a little bit more about our thesis, and then jump into some of the deals. It was funny. I mean, ultimately, I think running a fund seems much sexier than it actually is in the day-to-day operations. There's a lot of behind-the-scenes work that I think people don't see, and a lot of it can be just bogged down in kind of the legal operations. So for anybody that's thinking about starting a fund, it is much more work than I think people realize. I ultimately, after kind of doing this year of research and deep diving the ecosystem, learning about scalability, different consensus algorithms, the execution environments, all the underpinnings that made kind of blockchain architectures tick, I didn't know what I wanted to do at that point. And so the fund was kind of, I was talking with other funds to potentially join at that point in time, and none of them would hire me. They actually said, like, I didn't know that much. And they were like, a little bit, but you could come on as this like super junior person.
These were crypto funds, or
these were
like
crypto funds? Yeah,
man.
And some of them are actually like pretty prominent, like VCs. I won't name them, but
some of them are also pretty stuck up as well in the last few years. Let me say that.
Yes, lots of strong opinions, but I mean, they were just not super open-minded to different points of view, and so that ultimately led me and my business partner to start the fund, because we had a different point of view than the rest of the market.
Screw it, I'll make my own.
Exactly. And so we started the fund. And the funny thing there being is, it's a lot more work than people would think. It's not as sexy. But our general fund thesis is just, how do you bring more users into the ecosystem? And to your point, like earlier, there were a lot of funds that got spun up in the last couple of years. And a lot of them, I would say, did not really spend the time or do the amount of research that they probably should have been doing. A lot of them were just based off of momentum, or wanted to make a quick buck off founders, and like had the opportunity to do so and kind of jumped at the opportunity. I think what we're excited about today is, one, from our point of view, I mean, we have a very strong thesis. We understand the tech. We enjoy talking with the founders and builders, kind of architecting this future. But there is also a lot less funds in the ecosystem, just because a lot of them did kind of get wiped out from all the things that happened with FTX, with Luna, and took probably way too much risk and kind of blew themselves up. So
I think that's probably a good thing in the long run. It kind of clears out a lot of the clutter and a lot of the nonsense that was going on. And hey, it happens that's the point of a bust, is to clear out all of the nonsense that accumulates during a boom.
Exactly. And so our fund thesis is, how do we get more users into blockchains? If you have like 100 million or a billion users, what infrastructure would you need to support that level? And so that really is the only reason why we're so like technically focused, is because the blockchain industry is technical, and you have to kind of understand some of these small nuances to understand what scales and what doesn't. And even if it does work, is it the most optimal solution from, one, the engineering perspective? Like, does it make engineers' life easier or harder? And then from the user perspective, how does that ultimately manifest itself into the user experience? So we're just excited more broadly about bringing people into the blockchain world and getting people to use this really cool technology. And then on the deal side, it has been interesting. I think the metaverse got like super hot for a while. There was a lot of like people that wanted to chat about the metaverse.
So many, like even Zuck was like, oh, I love this thing. I'm going to change the name of my company, which is everyone in the world knows Facebook as a name. And then they're like, I'm going to change it to Meta. It's like, bro, nobody knows what the hell you're doing. What is that?
I think, I mean, ultimately the metaverse, I am kind of excited by it, just when you can have like really, say, like 8K virtual reality glasses at like 120 frames per second. That would be interesting.
I guess, yeah, like what is the metaverse? Is it just video games on a blockchain?
Yeah.
Like, should we talk about video games being on like a metaverse? Because I guess like there are, Star Atlas comes to mind as, prominent video game projects, but they are not branding themselves as metaverses.
True.
Per se, where it's an open world, you can go and explore stuff, you can go and do stuff. But ultimately, it's kind of more like an open-ended MMO. Is that a metaverse, or where do we draw the lines?
I will say, I mean, the metaverse is not really in our thesis. It's just something that I'm personally interested in from like the virtual reality standpoint. And when I kind of picture the metaverse, I think of it more through like the virtual reality lens, like you're actually wearing that headset and you're like transported into another place. And then you kind of layer the Web3 aspects of ownership into that. And that's kind of my end version of it. But yeah, it's not really core to kind of our fund or our thesis. I just personally think the virtual reality stuff is interesting. On the gaming front, though, that is actually different. I mean, today, the gaming infrastructure, I would say, is still like, or games more broadly, are still laying the groundwork to kind of be more Web3 or crypto native, and what it would actually take to, say, incorporate some of that functionality into it. Games take a long time to build. They're not easy, and it's not something that you can like ship overnight. And so I think how games will ultimately evolve is kind of like a very basic type of functionality. What was the popular game that Among Friends.
Yeah, Among Us. Yeah.
Among Us became super popular. And it was not like the most like graphically intensive game or like anything special. It was just kind of like unique, like social that you could do with your friends. And so we kind of think that like the Web3 version will be similar, where it will be relatively basic, kind of Among Us type style. And then over time kind of go out into those like very high fidelity games with like high graphics. But one game ultimately could bring on the entire population of like Web3 users, which would be fascinating just because the amount of people that actually use blockchains are relatively small today. But yeah, the gaming stuff is super interesting. Obviously, DeFi, any ecosystem in the blockchain world on the layer 1 or layer 2 needs to have like a pretty vibrant ecosystem in DeFi. And so Solana specifically kind of got hurt pretty bad from all the FTX fallout and kind of numerous bad actors. I think now that that has been flushed out, we're very excited to see what builders use Solana for, just because it is so high throughput. It has low latency, 400 millisecond block times. You can build some cool stuff. And so DeFi will be definitely interesting to watch as well.
Yeah, absolutely. And I guess as well, like you've spoken a little bit about the thesis, like do people come to you and say, I am a project that maybe I'm incorporated, maybe I'm not, like maybe I have a token. Like, how do you guys like actually interact with some of these projects? Like, okay, you know that this is an area that you want to be involved in, but how do you actually get involved? Like, does that mean buying a coin, or does it mean equity, or, is equity the wrong way to think about it for a fund that's in Web3? I don't know.
Yeah, I mean, a lot of it is difficult in the sense of, one, the regulation standpoint. It's definitely not clear, especially in the US. And then two, on the token versus equity front, those lines can often be blurred because the regulation is not super clear. I think from our standpoint, what we would prefer to do is token, just because those are kind of like the Web3 or crypto native way, but we do equity deals as well. But yeah, the tokeny versus equity, it does get into kind of like more deep conversations on how things should be structured. I think there's few projects today that have kind of utilized tokens well, and I think that's fine. We're still just kind of in the experimental phase of like, what value does the token actually add? Going back to like the first part of our conversation and like what got me excited about crypto, how can you correctly incentivize people to do a certain thing? I think the token has extreme amount of value in the long term. Just because the industry is so new, we're still trying to figure out lots of ways how tokens work. And so from our perspective, when we're looking at or talking with teams, just because our backgrounds were very product focus. We've built products at very large scales at Web2 companies. So we're happy to help on the product front. And yeah, I mean, really, as much as we can kind of ideate with founders as much as they need it or connect them with other people in the ecosystem, we're very happy to do.
Yeah, so that's a good point. A lot of people talk about utility of a token. And it's this word that gets thrown around a lot. In general, like, what do you think the utility of a token should be? Like, there is one argument that the token should be intrinsic to the app which you're using. So you literally can't use the app without the token. And then there's another school of thought, which is, yeah, but are you just building an app and then throwing a token in there and then it's just an annoyance that shouldn't exist? What is perhaps a good usage of a token per se?
That is a good question. I mean,
or maybe like, what are some examples of a good one and why are they good? Because I agree, like there is a lot of tokens out there, right? But what are they sort of bringing to the table that the usage of a token is something beneficial to everyone?
Yeah, I mean, it's been interesting. I mean, just watching like the different layer ones. I mean, ultimately, in the layer one example, the token, I guess, is kind of the most widely used in the sense that you're paying some amount of cost to access block space for this network, and you're paying for resources in the real world, and you're spending money to do so. And I think that is like the best example that we've seen of like token design, but that's like at the very like most basic primitive, like paying for real world compute or computation for a network.
Yeah, I think something along the lines of tokens are kind of like rewards programs. And just thinking of it in that context, like it's actually a hugely important thing. Like rewards programs are worth hundreds of billions of dollars. Like Starbucks rewards and coupon codes and airline rewards and credit card rewards, like these are huge industries. These are like massive, hundreds of billions of dollars on people's balance sheets of these things. So even if a token is more of, incentive mechanisms, rewards, things like that increase the marketability perhaps of a product. I mean, certainly in Step's case, Step existed, as a product before the token. And then when the token launched, it 4x'd our monthly active users. So like as a customer acquisition tool, it's also super important. But then again, it's kind of like, that's why you get a discount voucher or something when you go and buy a coffee or whatever. It's a way to incentivize people to want to use your product. Your product's maybe just the coffee, and that's fine. But the token is kind of like the incentive reward structure behind that. And maybe that's also fine. Do you see that maybe NFTs fall into that same kind of bucket? Or I guess NFTs are more focused on communities and community building. And like, does a token need to build a community? Or what's your take on the longevity of, say, token communities versus, say, NFT communities?
Yeah, I think friends with benefits on the Ethereum ecosystem was maybe the best kind of like token gated community out there, trying to kind of create like a real world DAO. I'm curious like to see how they do long term. On the NFT front, like that digital provenance and like having real world ownership, like that has, at least in the early stages, manifested itself into like some pretty unique projects. I mean, I've been able to attend a couple NFT related events, specifically like the Solana monkey business on Solana. They have built like a very vibrant community of like early builders, people that host real world events. They get together. They really kind of like one of the core projects, NFT projects that support like the Solana ecosystem. And so from that front, it's been interesting to kind of watch those develop. I would definitely recommend kind of having my other co-founder on. He's much more into the NFT side of things than I am, but it's definitely an interesting world. And I'm curious to see how it continues to unfold. To me, like outside of just the community aspect is like the digital provenance and like how that will continue to shape out over the future, I think will be super interesting.
Yeah, absolutely. And before, you also mentioned DAOs and a way to coordinate humans being sort of an interesting way to do things. And are DAOs structured correctly at the moment? Like, are they there for the long run? Like, what is a good DAO? It kind of comes into the token bucket again. It's like, what's a good token? It's like, well, what's a good DAO? It's like, well, what makes a good one? Or what are some examples of a good DAO? And like, what's the problem that's being solved there?
It does. I mean, I've written a little bit about DAOs, but they were hot for a while. what I've seen, at least personally, interacting with a DAO, like even from like a legal perspective, from a fund side, can be a little bit challenging, just because a DAO from like an entity standpoint is supposed to be native to the internet. But from like a regulation standpoint and being able to like coordinate with someone, like how do you open a bank account? I guess like you could keep it on Ethereum or Solana and just be completely Web3 native. But at some point, at least today, you have to generally offboard funds and pay for things. That may change down the future when everybody has a wallet and on-chain, but that does not exist today. And then the other thing that I've seen with DAOs is typically, I mean, humans are humans and you still kind of need some type of hierarchy or structure. And so trying to figure out that hierarchy and like who contributes what to a DAO can still be, at least from what I've seen today, is a little bit problematic in the sense of like assigning like who does what, and then just the general like governance and voting. If you want it to be like truly autonomous, you need people to contribute to the network and kind of vote on these practices. But if you vote too often, then people take too much mindshare and they don't really want to participate. But if there's only a core group of people or very few people that are actually voting on different topics, then it's kind of controlled by just a small select group of people. So I am excited for DAOs like long term. I think it would be very interesting when you can like essentially have a DAO that's like almost fully autonomous, but I think that will be a long way away.
Well, yeah, the question is like, is the goal of a DAO to optimize for not having one entity have more influence than the others or something like that? Is that like the core principle, or is it something else? And if there may be similar to companies, like it's okay that a company has people that make decisions, but in DAOs it's kind of seen as a bad thing. Do you think like the whole concept of trying to chase down, making sure that the stakes are as decentralized as possible in a DAO, like is that, I don't know, does that make sense? Because there's maybe, you know, there's been things in the past where people have set up 10 wallets, that all the 10 wallets vote together, or they borrow some funds and then vote. Yep. And it's kind of like you're trying to solve a problem here which maybe shouldn't be solved in the first place, or maybe isn't relevant.
Yeah, I mean, maybe like speaking on like decentralization more broadly, we have written a good amount about this. I think our point of view is you should have like definitely sufficient decentralization. I mean, when I say that kind of in a engineering point of view on like layer ones, ultimately what we mean there is like having a large number of full nodes so that you could recover the ledger. As long as one ledger exists in a blockchain, you can recover the state of the entire network.
Do you remember just quickly when Vitalik said a few years ago when it was like, oh, he doesn't have the copy of the archival node, or there's like one or two nodes or something that have like since inception been running the... I'm just saying like that's just a funny, hilarious kind of thing. But yeah, having a copy of the node of the chain is important.
It definitely is important. I think on the decentralization front, I mean, my main point being here is you need enough decentralization, but decentralization, you shouldn't decentralize just to decentralize. You should have sufficient decentralization, and after that point, you kind of get diminishing returns. From the networking perspective, if you add more full nodes, it takes longer to propagate that data to other full nodes. You have higher latencies, and you really don't add that much additional security. I think the main thing, more broadly speaking, that people will actually care about is like the censorship resistance. So can you submit a transaction on the network, or when you vote in one of these systems, do you have a high probability of that transaction being included in the network? I think people will care about this a lot more than just like, strictly speaking, decentralization.
It's a good point as well with sufficient decentralization, because I haven't really thought that much about. People are like, decentralization is this path that always goes in one direction, right? Where it's, we have to continually get more decentralized and more decentralized over time. But does it matter? Let's say you need 1 million individual entities to collude to double spend a transaction or do something. Let's say that it's 2 million or, 5 million or 10 million. Like, does that difference in distinguishability matter at the end of the day? Like, you kind of reach a point where, you're going to have literally everyone on the planet, 6 billion sort of entities that need to collude at the same time. Like, is that better than 3 billion entities? Probably not, right? Yeah. So where do you draw those lines and what is the optimal, I guess? I thought that's a good point there on sufficient decentralization and the diminishing returns as well.
I mean, I think when you're comparing like a lot of these layer ones, a lot of people think Bitcoin and say Ethereum are much more decentralized than they are, especially Ethereum. There's like a common misconception that like the number of staked nodes on Ethereum are equivalent to like the full nodes, which is not the case. The staked nodes are in a couple 100,000s, but those don't actually add a lot in terms of like network security. What really matters there is the number of full nodes. And when I look at this, it's a little bit hard to find like consistent metrics around Ethereum, but the number of full nodes is between like 6,000 and 10,000. The Bitcoin side, I think the numbers are a little bit more consistent around like 11,000 full nodes. And then like in Solana's case in point, it's been like 3,200 of full nodes. So that more apples to apples comparison, I think, is very healthy in terms of like being able to objectively measure decentralization. And that's only like one key component. We could talk a lot about decentralization, but other point being here is Ethereum is decentralized, but these other networks are also catching up and will have similar levels of security. And then after that though, like, do you actually need like, say, 100,000 nodes or 1 million nodes? I'm not particularly sure. I think the market will ultimately decide that, but there are diminishing returns to doing so. And I think like somewhere along that like S curve of adoption for decentralization, people will be like, yes, this is sufficient enough to keep my assets on it, and I'll feel comfortable doing so.
Yeah, I think this is something that needs to get talked about more, is where we draw the lines of these things. So I guess sort of coming full circle now, a lot of different sort of areas that you're looking at the fund as well. But what's your take on 2023? What are we going to be seeing this year in terms of, I don't know, new narratives or just things that you're personally interested in? Yeah, what's it all about? We're at January now, almost the end of January, man. Jeez.
I'm excited for 2023 in the sense that I want to just continue to see user adoption and like applications that actually bring that forward. And so going back to like our fund thesis, like these high data propagation chains, the ones that are going back to kind of the analogy of dial-up broadband and fiber optics, the ones that are in these fiber optic camps that have the high throughput, have low latency, that can do very fast transactions, low finality, low latency, those are kind of going to be the ecosystems that are really going to bring in the users. And so we're excited to continue to watch what engineers build on these high throughput systems as they are no longer kind of bottlenecked by the core underlying infrastructure that they were in the past. And so seeing more people use blockchains, whether that be NFTs, whether that be gaming, just using DeFi, we're excited about it all, but anything that really brings users into the ecosystem, I think will be better for everybody. If you look back to like DeFi Summer, what really kicked that off was the composability nature and like maybe 10 or 50,000 people using that. What if we had 10 million, 100 million people? That would be very interesting. And so I'm excited to get to that point where the infrastructure can support a large number of users. And I think today we have the possibility to do that, where in the past it was only Bitcoin, but that had no programming or smart contract ability. Then we got Ethereum, but it was relatively extremely low throughput and had high fees. And now we have more scalable technologies that allow very low fees and very high throughput. And that will actually be kind of the key thing that will unlock user adoption going forward.
100%. Well, that's what I love to hear. And that's what we love to hear at the Next Billion. It's all about onboarding those people and what they want to do. And the only way that people get onboarded is if you build interesting stuff which people care about and care about using, right? So Definitely. It's kind of hand in hand that a new user also means a new thing which people care about enough to use. So that's also a good thing, right? And whatever that thing is, don't know. It doesn't really matter. It's clearly productive because people are using it. So, well, look, thank you so much for your time today, Logan. It's been a pleasure. Where can people find you online? Also, Frictionless. Anyone out there building some cool stuff? Get in touch with you guys. Twitter, blogs, this sort of stuff. Substack. That's what I was looking.
So for our website, it's frictionless.fund. You can reach out to us there. And then follow me or DM me on Twitter. My Twitter handle is at Logan Jastremski. Definitely, I would say check out my podcast as well. We had the awesome podcast with George and talked with numerous other founders and kind of chief proto architects. That's on YouTube at the moment, just the Logan Jastremski podcast. But yeah, don't hesitate to reach out. Always welcoming kind of the cold emails and cold DMs. So please reach out if you're building anything cool.
Absolutely. And we'll put links to all of that below. Check out the podcast. It's great. And keep up the good work, man. Like I'm really excited to sort of see what you guys sort of get into this year as well. It's great to hear that you're on board with the xNFT backpack. That's a super cool wallet. And they're doing something unique as well, which other wallets aren't really doing. So sounds good. But check it out. We'll put the links. Thank you so much for your time today, Logan. And yeah, we'll be in touch.
Perfect.
See ya.